So let's get right to the floor show. Joining me now, SW Retail Advisors founder Stacey Widlitz, who, by the way, just upgraded one of those names we just mentioned, and trader Kenny Polcari. Kenny, I'm going to start with you. What is driving that 10-year yield right now, and why do you think the markets aren't shaken or stirred? They look pretty solid.
I think it's a dead cat bounce because don't forget, we were down for the last 3 weeks, right? The Nasdaq was down close to 8%. The S&P and the Russell down. The Russell was down 7%. The S&P was down nearly 4.5%. So I think today is more of a dead cat bounce. I think yields are going higher because, to your point, that the market expects interest rates to continue to go higher, especially on the back of Powell's comments last week and ahead of his Jackson Hole speech on Friday. So I think today's action is a little bit more of a dead cat bounce, as you know, and I fully expect to see it fade over the next couple of weeks.
Yeah, well, I'm sure NASDAQ investors hope it does too, because month to date, NASDAQ's down about 7% compared to about a 6% loss for the S&P. Sorry, make that 4%. And oh boy, it's the Russell that's down 7.2%. NASDAQ down 6%. Right. All right, let me bring Stacey into the conversation. Can anything in the retail world, any one of these names that reports, really kind of provide that catalyst that is needed? Because it almost feels like if they do well, that means the consumer's doing well, and that means the Fed will continue to raise rates. At least that's how the market will interpret it.
Absolutely, Liz. And I think what you've seen is a tale of two stories in retail. One is the traffic winners. You've seen that from Walmart and TJX, both had traffic and ticket up. And then you saw Target that lost 500 basis points of traffic and lost some share. So it's the have and have nots. But I think, from Walmart, we heard some encouraging news. General merchandise was less bad. Of course, the consumers getting stuck with inflation. Food inflation is up 20% in 2 years. But I think this week, you want to look at, number one, Foot Locker. We upgraded because, first of all, the stock is incredibly hated. It's like Target. And their numbers, their inventory numbers that we track look less bad. I think that's good enough. You have a new CEO. You have the channel cleaning out inventories. And you have Nike that's potentially stepping back into the Foot Locker channel after retreating for a while. So I think the numbers will be a sigh of relief on the week here.
Yeah, let's just point out, Foot Locker, you said unloved. Yes, it's unloved today. It's hitting a 52-week low. But let's just make this clear. That was the name that Stacey upgraded today, Foot Locker. Kenny, what do you like here? Because we're about to talk to Jason Calacanis about so much in the tech world. What about energy? Because, of course, that was not the best performer last year. We're more than halfway through the year, and we're still looking at rising oil prices, rising gasoline prices. Right. What do you think?
Listen, the energy sector is only up, I think it's 1 or 1.5% year to date. Right. And it was up 1% on Friday. So really it was, almost flat. I like energy. I think oil's going higher. I think gas is going to go higher. Certainly there's a lot going on in the energy space. And look, when people think about a lot of these big energy names, they immediately think of fossil fuel. Well, I had news for you, and you know this as well. ExxonMobil, Chevron, they're all moving into renewables as well. So it's a broad statement that they're making out there, and I think it's a very positive statement. So therefore, it's fossil and it's renewables because that's what we're going to need. And so I'm big on energy. I think energy is an opportunity here. So I would be a buyer of energy.
Well, not to mention that, you got gas stations at places like Walmart and sometimes BJ's. But right. To the point that, Stacey, you are making, as we look at some of these names reporting this week, could a Kohl's surprise? Who do you expect to see an upside surprise from?
So we're negative on Kohl's, and I've actually been negative on Kohl's for about 5 years now. But I think if you look at what has happened to Target in terms of their PR mishap this quarter and the loss of traffic and market share, Kohl's might have gained a little bit of that and might get a short-term pop here. So I think that's potential. We're hearing from Williams-Sonoma. And obviously, big ticket items we heard from Home Depot are down. The consumer's getting less credit, higher rejection rates on credit. So I think, you'll hear perhaps that Pottery Barn decelerated in those big ticket items. Certainly, we're going to hear from Macy's tomorrow. The good news for them is that sales growth and inventory growth is exactly in line. So you'll see margins intact. But like Nordstrom, I expect to hear a disappointing top line.
Yeah, Macy's down about 28% year to date. It's been a tough road for some of these names. Others, they're able to catch lightning in a bottle. We'll be watching all of it. Stacey, Kenny, thank you very much for joining us.